Hey guys, Jose Zavala here with ZTX Advisors. So today we're going to bring you guys a set of videos about the HR 748, the CARES Act, and how that applies to you as a small business owner. So for you guys that are clients already, we're already working on how we're going to implement this, how we're going to do to make sure you guys get the maximum benefit from this to help you get through this time. And for the rest of you guys, we're going to go ahead and provide this information for you because I want to make sure that you guys know what's out there as well. There's a lot of information flying around. And so we're going to go ahead and give you from what I've read, my perspective, and go from there. Before I start, though, I have to give a big shout out to my good friend, JJ, the CPA, who has been providing a lot of resources and has helped interpret a little bit of the stuff that maybe for me, I didn't quite get or didn't quite need a little bit of extra guidance. He has been tremendous with it. So go give him a follow, guys. And if you like this, please hit like and subscribe. We would love to have you guys on board. All right, so let's get into it. The HR 748 CARES Act, guys. So the most important thing is going to be the Paycheck Protection Program. So what is that? It's essentially a loan that the government is going to provide to you to cover certain costs. Now we're going to get into that a little bit later, what the costs are, but essentially it's going to give you a cost to cover your costs, and depending on what you use the money for, could potentially be forgiven with no tax effect to you. So essentially that means they're going to give you money if you use these certain costs. Okay? Now there's stipulations as far as who can be a part of this, who can get this money and who can get this this loan. So it's going to be companies that employ less than 500 employees, sole proprietors, independent contractors, and eligible self-employed individuals are also covered under this act, okay? So, considerations. What are the considerations? We need to be in operation on February 15th, 2020, have employees for who the borrower paid salaries and payroll taxes for, and paid independent contractors on a Form 1099 miscellaneous, okay? Now, the coverage period, which is going to be very important, is going to be from February 15th, 2020 to June 30th, 2020, okay? Now, how much are you going to be able to get? That's going to essentially be the average total monthly payments for payroll costs incurred during a 1-year period before the date on which the loan is made, times 2.5. So we're going to get into that calculation a little bit of what that's going to look like and what that maximum amount of that it is that you're going to get. Okay? And it's also going to be the outstanding amount of a loan that was made during the period beginning on January 31st and ending on the date which covered loans are made available to be refinanced under the covered loan. Or max of $10 million. Okay? So we're going to touch into essentially what that goes. Now I'm reading to you guys what the bill says. We're going to dissect that a little bit more, what that means for you. Okay? What can you use this loan for? Payroll costs. Okay? What exactly does payroll costs mean? Payroll costs, as defined, are going to be salary, wages, commission, or similar compensation, payment for vacation, parental, family, medical, or sick leave, payment of cash tips or equivalent, allowance for dismissal or separation, payment required for the provision of group health care benefits, including insurance premiums, payment of any retirement benefit, payment of state or local tax assessed on the compensation of the employees, the sum of payments of any compensation to or income of a sole proprietor or independent contractor that is a wage, commission, income, net earnings from a self-employment or similar compensation that the amount is no more than $100,000 in 1 year as prorated for the covered period. So for self-employed, based on what I'm reading here, it seems that for the first $100,000 that you made of self-employed earnings, you're going to be able to count that towards this amount. Okay? What does it not include? Compensation of an individual whose salary is over $100,000. Compensation of an employee whose principal place of residence is outside the U.S. Have to get the rest of my notes. Sorry about that. Qualified sick leave wages for which is allowed under the Corona Families First Act. So if you guys are taking that immediate payroll tax credit with the Corona Families First Act, the wages included in there are not going to be included in this. and qualified family leave wages. Okay? So, what else can you use the loan for? So those are going to be our payroll costs. What else can we use the loan for? Payments of interest on any mortgage obligation, which shall not include any prepayment or payment of a principal on a mortgage obligation. So essentially interest. Rent, utilities, and interest on any other debt obligation that was incurred before the covered period. Now here's the caveat. This is what I think just kind of blows my mind, which I've never heard of before. There is no personal guarantee required. So what that means, we don't have to have anything as collateral. We don't. And the good thing is, even if we get this loan and we still need a little bit more, we can go find outside sources to get credit somewhere else. Now, for a loan amount that is not forgiven, there will be a maximum maturity date of 10 years from the date that you apply from the loan. Not the day you get the money, the day you apply from the loan, and the interest shall not exceed 4%. Okay? Now, what you need to do, we need to make sure to make a good faith certification that the uncertainty of the current economic conditions makes the loan request, it makes necessary the loan request to continue operating. So essentially, because of what's going on, we need the money to continue operating our business. That we're going to acknowledge that the funds are used to keep workers and maintain payroll, make mortgage payments, lease payments, and utility payments. So that we're getting this money to make those payments that way. So you cannot have any application for a loan of the same purpose, duplicative of amounts applied for or received under a covered loan. So based on my understanding, if you apply for an SBA loan, the disaster relief loan, you're not going to qualify for this one. During the covered period, the recipient hasn't received amounts under the subsection for the same purpose, of course, so you haven't gotten paid by the SBA, and fees are waived for those applying. Okay? So the amount that, again, the amount that is forgiven is going to be excluded from gross income. All right? So that's very important. What does that mean? There's not going to be a 1099 COD cancellation of debt. You're not going to have to worry about that. Everything that is going to be forgiven is completely forgiven, no tax ramifications whatsoever. So, in order to get the loan to get forgiveness of the loan, we need to make sure that we pay the following costs. That's what they're gonna forgive us for. Payroll costs, as we described earlier, any payment of interest on any mortgage obligations, payment on covered rent obligations, and covered utility payments. So, and the loan forgiveness shall not exceed the principal amount of financing. So essentially, they're not going to forgive more than they give, which kind of, I think, makes sense. Now, here's a caveat, guys. This is very important. If you reduce your employees, there's actually a calculation to make sure that what you're going to get forgiven is not going to be exact. So if you calculate that you're fully staffed and they give you that loan and then you have to reduce employees, there's a calculation that comes in where you're going to have to make sure that you make the so you have to make the calculation so that you account for the reduction in labor, and you're going to have to pay some of that money back. All right? So, what does that mean? If you can, try not to let go of your employees. That's going to be the most important thing. That's what the government is trying to do. That's what they want us to do, is to continue servicing. I'm a small business owner like you guys. I'm the same way. They want us to continue serving our clients. Okay? Now, second part of this CARES Act is going to be the stimulus package. That's what everybody's talking about. Everybody's been posting about it, and I think it's great. I think that's a wonderful thing. So, what is it? It's going to be $1,200 per person, or $2,400 for individuals filing a joint return, with $500 per qualifying child. Okay? Now we have AGI limitations, and now mind you, this is not taxable income. This is AGI. Okay? So it's going to be $150,000 of married filing jointly, $112,500 of head of household, or $75,000 if you're filing single. Okay, so there's going to be a cap as far as the stimulus check that you're going to get. So if you guys make an AGI higher of that, you're not going to get it. Who is not included? Unfortunately, non-resident alien individuals. Okay, or estates or trusts. So if you have, from what I've seen here, if you have an I-10, unfortunately, you're not going to get it. Okay, they were not included. So how are these payments going to be distributed? Well, electronically, based on the bank information that the IRS has. So if you ever paid the IRS or had a direct deposit and they have banking information, they're going to distribute it that way. And based on my interpretation of what I've seen, if they don't have that information, they're going to go ahead and mail that check for you. Now, what they're also going to do, based on what this says, is they're going to send you a notice no later than 15 days after the payment's been distributed to you, to the last known address. So the notice is going to indicate the method by which the payment was made, the amount, and a phone number to contact them in case you need any assistance with any of this. Okay? And again, Social Security, you have to have a Social Security number, or I-10 holders are not eligible. Okay? All right. Another thing that came out of this is going to be for retirement accounts. So I know a lot of us have sometimes money in our retirement accounts, and when times get tough, we need to tap into it. I've done it before. It happens. So there are new rules with IRAs. Okay, you can distribute up to $100,000 from your IRA. Okay, and if you contribute to your IRA from another plan with respect to this distribution, then you could treat that as being an eligible rollover distribution. Okay. We'll get into that a little bit more of what that means. So, distributions from this plan must be on or after January 1st and before December 1st, 2020, to an individual who has to meet one of these tests. Diagnosed with the virus, whose spouse was diagnosed, who experiences financial consequences from being quarantined, furloughed or laid off, unable to work due to lack of child care, closing or reducing hours of business owned, or other factors deemed by the Secretary of Treasury. And any amount, so these are going to be the ones that are going to be eligible. And any amounts, or I'm sorry, this is not eligible. This is going to be the individuals, and they're defining which individuals can take this distribution. And any amount that is included in gross income for such taxable year shall be split up between 3 years to less than what is paid back. So it seems like, from what I interpreted, you're going to take the distribution out, and instead of having to pay that next year, you can split it up between 3 years in order to pay it back. And they got rid of, from what I've read, they got rid of the early withdrawal fee, to the 10% that you have to withdraw to take that money out. Now, something that's interesting that I read that I haven't heard much people talk about is an allowance of a partial above-the-line deduction for charitable contributions. So an above-the-line deduction for a charitable contribution up to $300. So that means above-the-line AGI, you get to reduce your income by $300 if you contribute to a charity for an individual, which I think is going to be great, because if you right now, under the new Tax Cuts and Jobs Act, if you're married, your standard deduction is $24,000. So if you're donating to charity, you're not going to get any of that. You're not going to get the tax benefit of it, usually, unless you have high interest or you know different other factors. But for the most part, you're not going to get the tax benefit of it. This way, anything you contribute up to $300, you're going to get a tax benefit for as above the line deduction. And some of the limitations for the charitable contributions were listed for corporations and individuals. Okay. Now, there's something else, another business provision that's in here. That's a payroll tax credit. Now, eligible employers can take a credit against employment taxes for each calendar quarter in the amount equal to 50% of qualified wages with respect to each employee of such employer for such calendar year. Now, the wages cannot exceed, per employee, cannot exceed $10,000. The credit cannot exceed employment taxes paid, and the employer decides, if the employer decides to take the payroll loan, they can't take this credit. Okay? All right, so that's going to be, there's a few things on NOLs. Looks like we can carry it back 5 years, and corporations can actually carry back an NOL to pay when they pay to the higher tax bracket to get a little bit of benefit as well. So that's going to be a little bit of what's going on, guys. We're going to dive a little bit more, some more videos as to a little bit deeper into what this stuff is with the whiteboard. And yeah, we'll be back. All right.